Orange County housing inventory just had its biggest drop of the entire year, while buyer demand quietly ticked higher. But here's what's even more interesting: Orange County's holding stronger than most major markets across the West. So, is our market heating up again, or are we just seeing a brief fall bounce before the holidays slow things down? I'm Leslie Swan with the Swan Team Real Estate, your Orange County real estate expert. This channel is all about giving you the tools and insights to navigate the market with confidence. So if you're buying, selling, or just want to stay ahead of the trends, be sure to hit that like button, subscribe, and turn on notifications so you'll never miss a thing. Today I'm breaking down everything you need to know about what's really happening in Orange County and how we stack up against other major markets like LA, San Diego, Phoenix, Las Vegas, and the Bay Area. Now, let's start with inventory because this is the headline right now. Orange County's active listing inventory dropped 4% in just 2 weeks, the largest decline of the entire year. We're now sitting at 4,576 homes for sale, the lowest since May. Last year, there were 3,666 homes on the market, about 20% fewer, but compared to pre-COVID years, when we averaged around 6,400 listings, today's number is still 40% lower than normal. Homeowners are still hunkered down, hanging on to those low mortgage rates. And as we head into November and December, we'll likely see inventory fall even faster, since fewer new listings hit during the holidays and many unsold homes come off the market temporarily. On the flip side, buyer demand actually increased slightly, up 1% to 1,609 pending sales, the highest level since March. That's small growth, but it's important because it's happening at the same time rates have dipped below 6.5% for the first time since last October. If rates hold at or below that level for a while, we could see a noticeable uptick in demand as we move into early 2026. We're not back to pre-pandemic levels yet. Demand is still about 41% lower than the 2017-2019 average, but things are definitely moving in the right direction. With fewer listings and slightly stronger demand, the expected market time dropped from 90 days to 85 days, its lowest since early summer. That means it would take about 3 months to sell every home on the market at the current pace. But even with that improvement, 85 days is still the slowest late September pace we've seen since 2019. Last year it was 71 days, so things are slower than 2024, but not by much, and still very normal by historical standards. Now, to get more specific, the fastest market time cities in Orange County are Los Alamitos at 33 days, Westminster at 36 days, and Seal Beach at 39 days. While the slowest market time cities are Laguna Beach at 297 days, Newport Coast and Portola Hills at 180 days, and Corona del Mar at 170 days. Now, speaking of Newport Coast, Corona del Mar, and Laguna Beach, the luxury market, homes that are priced above $2.5 million, is showing surprising strength this fall. Luxury demand rose 13% in just 2 weeks, while luxury inventory dipped slightly. The expected market time for high-end homes dropped from 215 days to 187 days, the best we've seen since March. Now, to break it down, $2.5 to $4 million homes are selling in about 148 days. $4 to $6 million homes are selling in around 188 days, and $6 million plus homes are averaging about 334 days. That's roughly a spring 2026 sale if you listed today. Overall, the luxury sector is trending stronger thanks to steady demand and solid stock market performance. Now, let's clear up one big myth. There's no flood of foreclosures. In Orange County, there are only 8 distressed homes on the market right now. That's 0.2% of all listings, and basically identical to last year. Across all of Southern California, distressed inventory is only 364 homes total out of nearly 40,000 active listings. So this is still a market driven by equity sellers, not distressed ones. Now, when we look back to August, Orange County had 1,875 closed sales, almost identical to last year's total. Homes sold for an average of 98.5% of list price, showing that well priced properties are still moving. And again, 99.7% of those sales were equity sellers, a strong sign of overall market health. Now let's look beyond Orange County for a quick reality check. In the San Francisco, San Jose Bay Area, market time sits at 85 days, almost identical to Orange County. But with over 11,000 active listings, they're dealing with nearly triple our inventory. Ventura County is moving slightly faster at 84 days. Maricopa County, aka the Phoenix area, has a market time of 115 days, and the Las Vegas, Clark County area is at 152 days, one of the slowest in the West. Across all major Western markets, the average time on market right now is 109 days, compared to Orange County's 85 days. So, despite the slowdown in parts of the region, Orange County continues to stand out as one of the most balanced and resilient markets in the Western US. And if you're wondering how the distressed market looks outside of Southern California, the Bay Area has just 110 distressed homes. Phoenix has 177 and Las Vegas has 118. All of them make up a tiny fraction of their total inventory. So the idea of a wave of foreclosures hitting the market simply doesn't hold up anywhere across the West. So what's the takeaway? Inventory is tightening again. Demand is slowly improving. And while we're not seeing dramatic price jumps, the Orange County market remains remarkably stable. If you're thinking about selling before the holidays, you'll face less competition and buyers who are still serious. And if you're buying, pay close attention to mortgage rates. Small drops can open big opportunities this fall. I'm Leslie Swan with the Swan Team Real Estate, helping you stay ahead of the trends right here in Orange County. If this was helpful, please be sure to give this video a like, hit that subscribe button for more real estate updates, and be sure to check out this next video about the major differences between buying a new construction home and an existing home. Yes, there are differences. See you next time.